Trost, the host of Business of Betting podcast. I'm joined today by Lloyd Danzig. He has an extensive collection of different jobs on LinkedIn, so I will have him introduce himself in a few minutes. But he is an investor in sports betting in the exchanges, amongst other things, has lots of opinions on the industry. He's been a sports bettor for a long time, has some really interesting perspective and interesting thought in the industry, and I'm looking forward to getting into it. So welcome to the podcast, Lloyd.
Jason, thanks a lot for having me. I have to say, I think myself, along with most industry participants, we're not sure if anyone would be able to fill the shoes left by Jake Williams, your predecessor. But man, have you done an amazing job, brought on amazing guests, had fantastic conversations. This podcast is such an asset for anyone entering into or trying to learn more about the industry. So very much appreciate all that you're doing.
I appreciate that. Every time I do an episode, though, I give more respect to Jake. It's just so much work putting in a good podcast. And he did 160 episodes, which is it's crazy. It's crazy. So much work. And he should be very proud of the content he built.
Yeah, and it's not like you don't have anything else going on with Smart Kits. A CEO of a growth stage company is more than a full-time job for most people. So impressive that you're managing to get any of these podcasts out, even relatively on time.
I appreciate that. The reason I do it is I believe, I don't find there's not that many places that actually talk about the business of betting. And I think it's super interesting. Most betting podcasts and content talk about tips and things like that. But I think it's cool for place for people to come to understand the industry and talk about the ideas. So why don't you introduce yourself? Because I know you've worn many hats in the past. And I think as an investor and a bettor yourself, you still wear many hats. Like, how would you introduce yourself to the business of betting audience?
Yeah, so I appreciate that. First and foremost, I run a venture capital fund, Sharp Alpha Advisors. We specialize in sports betting, real money gaming. I sit on the board or as a strategic advisor for many different companies in the space, most of which are our portfolio companies. So for the most part, that long list of jobs on my LinkedIn profile are the portfolio companies in which we as a fund are investors. I've done some angel investing, some strategic sweat equity advising prior to and outside of the fund a bit, but really by far the best and most easy way to think of me is as a venture capitalist investing in the next generation of sports betting and real money gaming platforms.
Are you able to share the fund size and which fund you're on and those details?
So we publicly announced the closing of our first fund of $10 million in October of 2021. We have since increased our assets under management quite significantly and have not made any new announcements just yet about current AUM or future funds or anything of the like. But the publicly available information right now will tell you that we closed a $10 million fund focused on pre-seed, seed, and Series A in October of 2021. And some more sleuthing and digging will reveal that additional activities have gone on since, but have not yet been discussed publicly in detail.
Okay, and of the 10, how much is dry?
We still have about 60% of dry powder remaining. We do a lot of fundraising through SPVs, and so it may be a bit hard for someone digging in to square up all of the math, because you can find us having allocated quite a bit more than, I suppose, $3.5-4 million. And the reason for that is other sort of parallel vehicles, AIVs, SPVs, and things of that nature. But we still have about 65% dry powder in the first fund and are actively investing into new deals.
Yeah, and for those of you not familiar with VC lingo, SPV is Special Purpose Vehicle, which is basically a side fund. And I actually didn't know the other acronym. You said I something? What is it?
AIV is an alternative investment vehicle, similar but slightly different.
Okay, different set of accountants.
Basically.
Cool. So is this fund, is the thesis in the business, the target investment, is it all in sports betting or is it across various industries?
So for the most part, it is all in sports betting and real money gaming. The umbrella term that I use to describe the class of products, platforms, services that we invest in is competitive entertainment, which is a term I coined and am trying to make more popular. And I use it to refer to any form of entertainment where winning or outcomes are what matter and are the source of the utility derived by the user. And so that's watching sports, betting on sports, playing video games, betting on video games, Peloton races for money, whatever it is, you name it. And this is an area in which I foresee a significant amount of convergence and consolidation, both enabled by technology over the next 5 to 10 years, as we're already starting to see with entrants like Fanatics and potentially FTX into the space. Vivid Seats, a StubHub competitor, bought one of my portfolio companies, Betcha, and is now operating both a ticketing and sports betting business. So, yeah, sports betting is absolutely core to our thesis, and the overturning of PASPA very much was the catalyst for the investment opportunities that we see and pursue. But as VC investors, we're investing with a 5, 10 plus year time horizon. And so when we look further into the future, I think competitive entertainment is the best term I could use to sum up the types of deals that we'll look at and products that we'll underwrite.
I like that the term has buzz to it. I like the term, but can you link to me intellectually a Peloton competition with a sports bet? How would you link those two?
I guess it depends what you mean by link. The way I see it is that there are all of these psychographically similar activities where when you're a type of person who's in the mindset to pursue one activity is highly likely to want to pursue the other activity. If you place a bet, you are much more likely than the average person to want to buy a ticket to that game or buy a jersey of that player. In general, if you're wagering real money over the internet on sports, you are more likely than the average person to want to wager real money over the internet on a casino or on other types of activities. Video games, for example, I'm invested in a company that allows you to play against your friends, strangers, and now the house in your favorite AAA video games for money. Madden, FIFA, 2K, Call of Duty, and things like that. And so it's hard to say whether a true super app that offers every type of gambling and gaming under the sun, as well as adjacent activities, will ever come to fruition. But I certainly think DraftKings now having their NFT marketplace and NFL Rainmakers, Fanatics adding sports betting to a ticketing, merchandise, and collectibles company. These are some of the early instances that we're seeing of attempts to cross-sell and cross-pollinate users across these, again, very psychologically similar types of activities, where if you're already engaged in one, it's a relatively low lift to get you engaged in the others.
Got it. And in your investment strategy, how much are you taking the picks and shovels approach versus the operator approach?
Definitely have a great affinity for picks and shovels. People hear that phrase a lot. Where it comes from is the idea that during a gold rush, the best way to make money is by selling picks and shovels rather than mining for gold yourself, because everyone needs to buy a pick and a shovel. However, although it is the case that there will be a low frequency of gold miners who strike it rich, the ones who succeed will almost certainly have larger outcomes than the pick and shovels sellers. It's just that there will be fewer of them. I think that's a perfect analogy here, where the largest outcomes almost undoubtedly will come from B2C operators, because those are the companies that own the high LTV, high lifetime value end user. Those are the ones that are able to produce outsized outcomes. In effect, B2B companies, almost by definition, are limited to a percentage of B2C revenues. Otherwise, where would they possibly earn their revenues from unless they're servicing other industries? And so I think in general, it probably is the case that for the most part, B2B businesses may offer the best risk-adjusted return, but oftentimes it is the B2C operators that provide the greatest absolute upside. And so we like to invest in both. Generally avoid companies that are directly competing with DraftKings and FanDuel for market share, because that is quite challenging to do. But as mentioned, we're invested in one of the primary Betfair style exchanges, which is now live in New Jersey. Profit have been involved in several of their financing rounds, and am involved in a number of other niche audience specific B2C plays, as well as alternative platforms. For example, I mentioned a company called Players Lounge, where you can play against your friends or strangers, or now the house. They will make you odds. You play Call of Duty, they will say, I will give Jason plus 200 odds that he can't kill over 7 people in this match, or match you up with someone to play a $100 game of Madden against. And so, again, have a deep affinity to the picks and shovels. Think that probably a lot of the best risk-adjusted returns do come from that space. But I also think that the greatest outcomes in an absolute dollar sense will come from B2C operators. And so, we try to do a bit of both.
So one of your portfolio companies is Profit, is that correct?
Correct.
So exchanges are obviously near and dear to my heart. What's your? How do you see the market? What do you think the role for exchanges are in the American market?
It's a fascinating topic. I, like you, come from a financial services background, and so at the base level, the intellectual appeal of an exchange that uses a limit order book to process sports bets is incredibly appealing and intuitive, and seems to make a lot more sense even than the fixed odds model in the way that operates. I think that we're still very early in the U.S. market's relationship with exchanges. Exchanges require a bit more sophistication from the sports bettor than a standard fixed odds model. And they also tend to attract more of a value seeker, a high volume, lower margin type customer. People who want instant gratification, who want to bet 100,000, 10,000 to 1 in-game single game parlays, or so-called micro markets, micro bets. They tend, at least in today's market, to be a bit different from the audience that seeks out an exchange. But, and I forgot which of your guests I think made this point quite astutely, there is still a lot of room for the U.S. customer to grow in its sophistication and value seeking as relates to sports betting. Right now, even though, of course, there's been a very robust gray market for a long time, legal fixed odds sports betting is very new and novel. There's not a ton of price sensitivity. I think your average recreational customer is looking for 100%, 500%, 1,000% return in one day. And so telling them that they can use this other platform that'll add 2 or 3 percentage points to their ROI is not as appealing as it is to a longer term, more sophisticated bettor who understands how that impacts your bankroll over time. Of course, we already have seen a lot of issues with players getting banned and players getting limited, and the exchange, I think, is a really nice home for a lot of those players. But I mean, first and foremost, one of my viewpoints is that as the U.S. sports betting market, as the U.S. sports bettor gets more sophisticated and understands why value is even important in sports betting in the first place, the appeal of the exchange will rise dramatically. The other significant challenge, of course, is liquidity. The Wire Act prevents sharing liquidity across state lines. Profit and Sport Trade both are live only in New Jersey right now and have to do this one state at a time. And much like poker, a lack of liquidity not only makes the economic model challenging, it compromises the user experience. If someone finally convinces you to try this new thing called an exchange, and you go on, but you don't get your order filled, you don't get your order matched, there's a pretty low chance that you'll then go and try again the next day. So liquidity is very important, and I think it remains to be seen. It's certainly something we can discuss. Will they repeal the Wire Act? Will we enter into some sort of multi-state liquidity sharing agreement as we saw in poker? Will regulators be amenable to creative structures where a market maker places a server at a casino or in a specific state, even though their chief place of business is outside of that state, and allow that to satisfy Wire Act criteria? So I think we're still in the early days, and I think liquidity constraints are significant. But undoubtedly, I think there's a great opportunity here. The last piece of research I saw from Eilers and Krejcik was expecting 4 to 8% of GGR to come from exchanges at the mature state of the market. I do think that makes sense to me as a relatively lower bound, but I also think there's an opportunity to see a greater share of GGR produced by exchanges, depending on how innovative they can be, how intuitive the user interfaces can be, and so on.
Yeah, I was going to ask, is your vision more that exchanges should become more mainstream or that they will be big niches as they are in the UK? I mean, that 4 to 8% number I hadn't heard. It doesn't sound crazy to me. It sounds quite reasonable, actually. But I always estimated the market share in the UK was like 10 to 15% exchanges. And it's kind of been at that for 10, 15 years. It's maintained that level. So do you see the market maturing to like the UK where exchanges are capped at 10% market share, or do you see a world that exchanges could grow into mass market products?
So, you probably are closer to this data than I am. Typically, what the data that I hear is that in the UK market, 10% of handle is attributable to exchanges, but not 10% of revenue because exchanges have lower margins than sports books. And whether it's actually 10 or not, I'm sure that is the case, that exchanges make up a larger share of handle than GGR in the UK just because of the margins. My thoughts are that I think the UK scenario is sort of the base case or even the bear case for exchanges in the US. At the very least, they serve a functional purpose. They can absorb the high volume, low margin action. They can be a home for sharps who have been banned and limited. They can be a home for more institutional style players. Nevada is a state that already allows what is called entity wagering, where an LLC or corporation can place a bet. New Jersey is rumored to be considering it, other states potentially as well. And so I think at the very least, you will see the US equal the percentage of handle or GGR share that is seen in the UK. I think the opportunity to improve beyond that is mostly a matter of UI UX development and coming up with new ideas and ways. And, I am an investor in Profit, and their closest competitor these days is Sport Trade. But Alex Kane at Sport Trade is someone I consider a close friend and a fantastic innovator and entrepreneur. And if you look at Profit, they are really a Betfair style exchange. They have, I think, a bit more of an intuitive user interface that is more accessible than Betfair today, but very much similar, sort of structurally isomorphic. Sport Trade took a different spin on it. They really brought in more of a Robinhood type UI UX. They don't have minus 150 and plus 360 or spreads. All of their trades resolve to a $0 or $100 outcome. And so they have pulled from sort of the Predict It and Robinhood model and merged them to some extent. And if you look and play around on their product, it looks more like Robinhood than it does any type of sports book. And so I think that the base case, if you just import the Betfair model and make some UI UX improvements, is to essentially match what we see in the UK. But with UI UX improvements on top of that, I do think there is an opportunity to go beyond and to take a larger share, especially if you can offer better pricing along the way.
So you said earlier that you don't like to invest in direct competitors to FanDuel, DraftKings. Is that because you think it's the mountain's too high and they have too much money to spend on marketing? Do you think they're that entrenched in market share, or what's your reason for that hypothesis to not go up against FanDuel, DraftKings?
And to clarify that first, I am considering the profits and sport trades of the world to be different enough that I don't see them as directly competing for market share. Obviously, in a sense, they are. They get the same licenses and the same market access and are pulling for the same share of wallet. What I more am referring to and see a lot of opportunities all the time are investing in the companies that are, the number 19 or 20 ranked fixed odds sportsbook in New Jersey or attempting to be so. And the reasons why I find that difficult are for the exact ones that you described. The mountain is so high to climb. The economies of scale in this industry are so significant. It is so difficult to compete with the bonusing and promotions that the big sports books will offer. As sports books get larger and operate in multiple jurisdictions, they end up switching from a state-by-state marketing plan to a nationwide marketing plan that ends up being a lot more efficient, not to mention how they can negotiate with their vendors and things of that nature. And so, look, I do think you might see an outsized return from a PointsBet or a Rush Street Interactive or a brand like that. But I do think it will be quite difficult, and we already saw Fubo Sportsbook officially threw in the towel yesterday, I think. I expect more companies to close up shop that are in, again, the 15th to 20th ranked by market share B2C fixed odds operators in New Jersey. Those are the ones that I think, are quite difficult. I will say, the spinoff from Simple Bet, Better, they raised quite a bit of money at an impressive valuation and brought Jake Paul on to do the media thing, and will significantly lower their cost of customer acquisition because of that, and have secured market access by granting equity rather than paying cash. And they're doing a lot of really innovative things, and maybe they will make a run at it. Maybe Underdog Fantasy will find an interesting way as well. But for the most part, it is just too capital intensive, especially for a small fund, to back a company that is directly going to be competing with DraftKings and FanDuel for customers, for licenses, and ultimately for market share.
The way I see the market evolving, which is completely different from most people, and I'd love to get your thoughts on it. I see over time, who knows if it's years, it could be decades, I guess, but it could be years, it could be months, who knows. But I see the margin getting compressed by competitive forces over time. I just saw a print in New Jersey. I think they did 900 million handle, and the margin of the operators was 11%. And this is in a world where most of these operators are not turning a profit. So to me, it's insane that A, the margin is as high as 11%, and B, nobody's making money at these 11% margins, which is, like I said, to me, it's crazy. My thinking is that over time, margins are going to get compressed, and you're going to have, whether or not you show it as an interface, you're going to have an exchange underneath the hood in order to be able to price things with a high frequency, low margin, because the sportsbook model of a guy with a sandwich in front of a computer watching a baseball game is not going to scale it's not going to scale, and it's not going to be fast enough, and the margin's not going to be tight enough. When you hear that point of view, do you agree with that, or do you think that's not the way the industry is going to shake out?
So let me separate that into two parts. One part is belief that margins will decrease over time. Other part, which I think is a fascinating topic, is that fixed odds sportsbooks will actually just be full blown or at least partially exchanges under the hood. To that second point first, that idea appeals to me greatly. There are a few different companies out there now, either that have their origins as quantitative analysis driven betting syndicates or otherwise, that are trying to offer sportsbooks pricing feeds with the added bonus that the provider of the pricing feed stands ready to take a bet at that price, or to allow the sportsbook to offload risk at that price up to a pretty significant threshold. First of all, I think that is an awesome business model from the perspective that you're actually putting your money where your mouth is. You're not just sending out some XML or JSON feed saying, we think this is what the price should be. You're saying, we think this is what you should set the price at. And if you don't believe us, or you want to test that, we'll take $10 million worth of liability at that price on either side of the market. There are some regulatory and technological challenges to actually making that a mass market product, but the people who are working on it are brilliant and have been doing things like this for quite some time, and I think we'll find a way to make that an enterprise offering. And so whether it actually is the case that there is a limit order book underlying a fixed odds operator or not, I think at the very least you will see a sort of programmatic ability for a sports book to instantaneously offload risk in such a way that essentially makes them some sort of exchange or matching engine under the hood. The first question is really interesting. Presumably, or if you just look at sort of natural market forces or how industries evolve over time, it would seem that margins should compress. I think that the two counterpoints to that are, one, that if you expect a lot of consolidation and you expect there to be fewer B2C players in the market tomorrow than there are today, in theory, that would cause less pressure on margin compression. And then I think the biggest confounding variable is the onslaught of same game parlays and micro betting and whatnot. I do think that on average, the margin on a Monday Night Football money line bet or spread bet will decrease. But I think the share of wagers that are placed in the form of same game parlays, bets on micro markets, all of these ultra high margin products where you're seeing 20% plus margins, that is going to likely represent a larger share of handle tomorrow than it does today. And so I think there's a few different things in tension and some confounding variables. But the thing I am at least willing to say I do agree with is that I think the margin on any given bet is likely to decrease over time. But I do think that the mix of bets is going to favor or skew more heavily to high margin bets over time. And so it's hard to say how that will impact the industry wide margin. Although, again, I do very much agree with you on like a bet specific on a NFL money line or spread bet that those margins should go down.
But don't you think that the bet builders and the intra game parlays will compress as well? I mean, if somebody's offering this margin for 25% and there's an operator that offers the same bet for 8% margin, don't you think there's going to be capitalistic pressure to that's our hypothesis, is that price will be driving a lot of consumer behavior, and these high margin things, there's nothing stopping any operator from lowering the margin on these bets besides their business model and their fixed cost needs and all that kind of stuff. But anybody can have low margin betting, so don't you think one of these 20 or new entrants will come along and start really putting pressure on the existing model?
So this is a really interesting analytical data science economics question. I don't know if in the next 5 years, let's say, anyone will be able to offer bets on will Aaron Judge, what will the outcome of his next at bat be? Or will the next play be a run or a pass? I don't know if operators will be able to offer bets like that at a 1 or 2% over round. The potential for information asymmetry and adverse selection, as you've referred to many times, the potential to have significantly unbalanced action on a particular market, the lack of true confidence in the pricing in the first place. I am tempted to believe that, especially for micro markets and then also for same game parlays where the margin compounds, I don't know that you'll see something like a 1 to 2% margin or over round on those type of bets. If you were to, then yes, I would agree. If someone really figures out the pricing in a way that they can be so confident that either A, over the long run, they will be maximizing expected value in a profitable way, or B, they have a way to balance their action and do risk management in real time. It's possible, but I have a sense that micro bets and 12 leg same game parlays are not going to have 1 to 2% margins anytime soon. And so what I would argue is that even if the same game parlay margin goes from 25% down to 12%, but the amount of handle that those bets represent increases by 3x, that would shift the overall margin up if it currently is at, let's say, 10 to 11% or whatever it is. So really, I think it comes down to how confident can any given operator be in their pricing. Here we are in 2022, 4-5 years post PASPA, and really DraftKings, powered by a third party, Simplebet, is the only one truly offering micro markets, which seems to speak to the difficulty of the data aggregation, cleansing, and processing problem, plus a bit of the challenges on the data science side. So we will see. I definitely think your argument makes perfect sense intuitively and theoretically when you study any market that has ever existed or any industry. But if you think about how long this industry has spent not even accepting correlated parlays because people were unable to price them properly, not even letting you bet on a really big favorite and the over to both occur in the same game, it seems to suggest it may take longer than expected, even though that disappoints the inner data scientist in me that is the case. It may take longer than expected to see 1 to 2% margins on same game parlays or micro markets.
Yeah. So where do you see if you were prognosticating sports betting in 10 years, are FanDuel and DraftKings still there?
Yeah, I mean, I definitely think the platforms and the user bases are still there. Is it possible that DraftKings is called ESPN Bet at that point? Perhaps. Is it possible that there is, all sorts of other business mashups that lead to a different brand name and logo on the consumer facing side. That is certainly possible. Currently, the market share that is aggregated among DraftKings, FanDuel, BetMGM, and Caesars is 80 to 90%, depending on how and when you measure it. I think that we will see a lot of consolidation at the corporate or parent company level, but that a lot of operators will likely operate multi-brand strategies, maybe a separate brand for the Spanish-speaking audience, or a separate brand for the esports audience, or a separate brand for the European audience, whatever it is. In Europe, of course, we've already seen the multi-brand strategy by GVC, now Entain, just as one of many examples. What I think you will absolutely see in 10 years is a lot more brands that historically have not been considered endemic or native to the sports betting space, at least having taken a crack at entering it. Fanatics and FTX are two prime examples there. And somewhat conversely, we will also see sports betting companies add on all sorts of non-endemic, non-native user flows and revenue streams. And really hard to fast forward 10 full years and imagine how that all plays out. But I do think that the space will be quite different 10 years from now than it is today on a variety of dimensions.
Yeah, it totally makes sense. Awesome. What do you think about sportsbooks limiting winning players? What's your take on that?
It's a ethical, tough and complicated topic. So I think that, first of all, a sportsbook posting site-wide limits, I have no problem with. If they want to say that this specific bet is a bet they will only take up to $100 or $500 from all customers, to me, that is non-controversial. I have no problem with that at all. I honestly don't even think I have a problem with transparent, user-specific stake factoring, as it is typically called by risk managers, where you profile your users and certain users have a limit on all or some bets that is 1% or 5% or 10% of what the base rate would be, as long as that is advertised to the user upfront when they log on, when they're looking at the pricing. The thing that I find most problematic by far is what effectively is a bait and switch, where an operator posts a price, a bettor goes in to make a bet at that price, and that bet is rejected, and then the odds are moved. Because essentially in that case, the operator enticed someone to take an action on their platform from which they, the operator, are deriving valuable information. But the only reason that person took that action was for the promise of the ability to place a bet that they are then being deprived of once the operator has already gleaned the information they are looking for. And so I think that specifically is the practice that I have the most difficulty getting my arms around. I think it is the one that sharp bettors find the most deeply infuriating and insulting, because the books, go out and in their press releases and their investor summaries, they talk about how their models are amazing and they're great at pricing, or their supplier is great at pricing, that there's no new information they could possibly incorporate into their models that would make them more accurate. But that is belied by the very action of limiting or banning or rejecting a bet from a sharp and moving the price, because of course you are then incorporating that information into your model. And so that is the specific practice that I really, really dislike, and would prefer at least be migrated to a transparent stake factoring, whereby a user logs on and when they're viewing any given market, they can see what their limit is before attempting to place the bet.
Yeah, totally makes sense. Well, in your seat as an investor, I'm sure you see lots of pitches, and as an investor, you have to say no a lot. But you know, the nice thing about being an investor is you get to see what a lot of the market is trying to do. What are one or two things that you're really excited about in sports betting over the next couple of years?
Yeah, that definitely is, the privilege of being investors, getting to see what really smart, passionate people are building. I am excited to see how personalization and recommendation engines change the shape of our industry. I know in some previous episodes you've expressed skepticism over just how accurate and high fidelity a bet recommendation can be, but I have this view of the future where your smart alarm clock will use a bunch of data to figure out when to wake you up. Your smart refrigerator will tell you exactly what to eat. Your smart closet will look at the weather and your schedule and the RFID tags and all your clean clothes and recommend you what to wear. And then your smart sportsbook or online casino app will serve you the exact betting opportunity that you want the moment you open the app, perhaps even to a degree where a user never has to search or navigate a sportsbook or casino app again. We'll see if we actually get to that point, but I do think
can you float on a skateboard as well?
not quite yet, but me and the doc are working on that for sure.
But in your RFID world of in this fantasy world, like screw the betting recommendation, you might as well just have a robo advisor that's betting for you. Like skip that step and just have your Charles Schwab guy who's placing the bets on your behalf.
First of all, I think there are a ton of people who find the actual process of placing a bet very fatiguing and anxiety provoking and would love to be served a set of things to root for this tonight, and if it happens, you'll win. I actually think there are a lot of people who would really enjoy that. And then there's another subset of people who want to feel like they did a bunch of really rigorous analytical research to decide what to bet on without actually having done any such research. I think it actually is probably almost a minority of sports bettors. If you look at the entire population and think about mass market adoption, you probably are in the minority, and I certainly am in this minority, if you truly enjoy doing the research and whether it's building a model or reading the power rankings and entering all your bets. But I think for a lot of people, that is actually a very intimidating, anxiety-provoking, and fatiguing activity. And I would absolutely, wager that there will be a lot more robo-advising or automated bet slip generation that occurs in the future for the people who just want a little extra adrenaline rush or just want something to root for. And the beauty, by the way, is that there's also a bit of ego involved. You don't want to put your money on something and then be wrong because it shows that you're stupid or uninformed or something like that. But if you can simply blame the random number generator or the Charles Schwab powered robo-advisor, it's a bit easy. And that, of course, speaks to this interesting, aspect of human nature whereby most people, when they place a bet and they win, it's because they're a genius. And when they place a bet and lose, it's because the ref made a bad call or, some aberrant outlier type of behavior. Aside from personalization, I think that one of the things I'm excited to see is how betting and betting-like products can enhance other forms of competitive entertainment. I mentioned Players Lounge, which allows you to do this in video games. I'm invested in a company that allows you to play sort of brain games, cerebral games for money. I do Seinfeld trivia and South Park trivia pretty frequently and fare pretty well on those. They have real money crossword contests, real money Family Feud, other types of games like that. So I think that is, that is all very interesting. And then I think, a lot of the innovation is going to be a bit more subtle, but in minimizing the frictions that currently stand between someone who wants to place a bet and actually succeeds in doing so. And those frictions exist in all sorts of manifestations on the back end and front end. I think you'll see a lot of those frictions come down, and you'll see the betting experience become much more seamless. Finally, the thing I'm most interested to see how it plays out, almost every operator and every media company and a million different startups are working right now on at least trying some sort of single screen betting experience on a connected TV or on mobile, where you're watching the game and then from the same screen, you can add a video chat with your friends, you can buy the jersey that the player's wearing, and you can place your bets all on the same screen. Everyone seems to be working on some form of this. All the operators are contemplating it in one variation or another. My current view is that this technology will actually not take off on big screen TVs necessarily. If you've ever had to enter your password using a Roku remote or an Amazon Prime remote on a TV, you know what an absolute pain it is to interact with
getting
your
easier,
TV
but
in
yeah.
the way you do. And for the most part right now, I think when you're watching your game on a big screen TV, the best way to enhance that is through a second screen on your mobile phone. But I do think this technology will likely take off for the cohort of people that watch long form streaming video on mobile in the first place. If your mobile device is where you are watching the game, I think it actually makes a ton of sense to be able to bet and interact and do all sorts of things directly within that app. So everyone's going to come out with some sort of watch and bet app or implementation, and I'm very interested to see which are and are not successful.
I've always kind of wanted to see a real-time chart of the price of something happening. So, like the midterms is coming up, as I'm watching CNN, I'd love to see like a real-time chart, the Republicans or Democrats going to take the House. And, I'd love that if I was watching my team's Northwestern, it'd be trading very low this season. But I'd love during the game to just see the price change and have a little chart in the lower left-hand screen.
I absolutely would love, even on my big screen TV, to see a soft, somewhat translucent overlay, perhaps that's auto-synced to my betting account, that figures out what is the outcome I care most about, whether it's specific player scoring a certain number of points or throwing yards, or if it's the game itself, and watching the implied probability of that change. And I also agree. I think real money prediction markets outside of sports, whether it's on on political outcomes. There's the site Kalshi that now lets you bet on how many people will go through TSA security in the U.S. tomorrow, how many positive COVID tests will there be tomorrow. I absolutely think, and by the way, I think Smarkets has some of the best graphics that they inadvertently end up producing for things like probabilities of political outcomes. You guys got a great dark mode user interface that, I think makes for some really interesting graphics. I absolutely would expect more people and broadcasts and media to start overlaying implied probabilities as derived by betting markets. I think that's really interesting.
Yeah, it's cool stuff. Before we hop, what do you want to be when you grow up?
Ooh, man, that's tough. For a long time, it was always a dream to rush the field after a major Division I college football game. I went to a college that did not have such football games, so that was a bit out of reach. But I did finally get to do that at an LSU Alabama game down in Baton Rouge, and that was an awesome experience. I think when I grow up, I love to cook. I love to eat. I would love to own a small, maybe an Italian restaurant. Not too many tables, where I set the menu. I'm the head chef. I come out every night. I talk to all the different guests. I comp the meals of anyone who seems to be pretty nice. And I'm always, putting new things on the menu, going to the market in the morning to pick out the best ingredients, and really, putting my whole self into a menu of great food that I get to cook up and serve to people, and enjoy a nice conversation or glass of wine around. I think something like that is what I would love to eventually find my way to.
Like Artie Bucco from Sopranos. I don't know if
slightly
Sopranos is
different.
One of your shows.
Yes, slightly different from anything Sopranos related. But I do think just the appeal of owning a small restaurant, making the menu, changing it up each day, interacting with all the customers who are hopefully enjoying it, and generally being a far distance away from constant emails, Slack messages, text messages, and the like. That sounds like paradise for me, especially if you could add in maybe a nice view, a nice water view or something like that. That would be great.
That sounds eminently doable. So I'm very optimistic you'll be able to do that one day in your life. I was super lucky to rush the field in 2001. Northwestern beat Michigan 54-51, which is one of the craziest football games I've ever seen on TV or in person, and it was fun. It was fun. I'm glad awesome. You got to do it, even though it wasn't. Who's your team? Who's your D1 team?
I don't. Michigan is
no,
my D1 team. Oh, I went to UPenn, so Ivy League is not even. They're D1 AA or whatever. I don't even know.
Yeah, they have D1 wrestling. They're pretty good at wrestling. They have a good wrestler every once in a while.
Their debate team is probably better than most of their athletic teams, frankly. But yes, fair enough.
Awesome. All right. Well, thanks very much for joining us, Lloyd. I really enjoyed your perspective, and it was great to have you on.
Thanks a lot, Jason.